Good afternoon, good evening, all. My name is Nick Williams. I'm from PayCLT, and welcome to PayCLT and NYPAY's collaboration, Pay by Bank. Will it grow and take market share? We're so happy that you're here with us this afternoon, or this evening, whatever time it is, wherever you are. And I'm going to do a quick intro of PayCLT and then pass it on to David True, who's going to do a quick intro of NYPAY, and then we're going to get you to the fun part of the evening. So, PayCLT is a network of payments professionals focused on education, collaboration, and professional advocacy based in Charlotte. We're very lucky to have two fantastic sponsors in Finsley and Endava is a technology consulting firm based out of Charlotte with a strong presence in Charlotte with a lot of payments expertise. And Finsley is a Charlotte-based fintech offering a leading payment hub solution. So we also have fantastic media partners at PayCLT like NYPAY and event partners who we've partnered to bring this event to life. So with that said, let me throw it over to David True from NYPAY, and he'll give you a little tidbit about NYPAY, and then we'll get going.
I said I would do this in 30 seconds, so let's see if I succeed. Y'all who've been on these events before know me and know NYPAY. We've been all over this space for a long time doing events that we hope are, interesting and beneficial. This will be recorded and up on YouTube afterwards. After the discussion, there will be 20, 30 minutes of breakout discussions, virtual breakout discussions, so stick around for those if you've got the time. Housekeeping. It's important. I think I'm going over 30 seconds. Housekeeping. Please turn off your camera and your microphone. We want the focus to be on the participants, the panelists, and the moderator. And I think I'm at 32 seconds. So at this point, having said all I need to say, you can go to nypay.org to learn more. I'd like to pass it over to the estimable Alex Johnson. If you don't follow Alex, you certainly should, because I've never read one of his columns that didn't leave me smarter.
Well, thank you, David. That's very nice of you to say. Lovely introduction. And thank you all for joining us. I am very excited to be moderating today's discussion. This is a topic, Pay by Bank, that has fascinated me for a while, but I think for a number of reasons, which we will get into over the course of the discussion, it's particularly relevant right now to learn about and to talk to practitioners and folks on the ground who are actually dealing with it on a day-to-day basis, which is what we're going to do. So, as David said, we're recording this session. We are also, in addition to the breakouts that are happening after this, for smaller group discussions, we are also taking questions. So if you have any questions, please go ahead and enter those in Zoom, and we will try to get to as many of those as we can. If you don't do that, then selfishly, I'll just use the time to ask more of my questions, which I have plenty of on this topic. Before we get into the event itself, would love to introduce our panelists and have them introduce themselves and tell us a little bit more about their companies, their role, and just kind of establish a little context on who's going to be talking about Pay by Bank. So I will just go right down the list, starting with Moa. Would you mind giving us a little info on Trustly and your role at Trustly?
Absolutely. Thank you so much. Yeah, my name is Moa. I have been part of Trustly since I think it's 7.5 years now. So like eons in Trustly time. I started over in our European organization. I am Swedish, so I am Stockholm. So that's from Stockholm. So that's where I started. I did that working with our banking partnerships over there for the first 3 years. And then I started working with our North American bank partners about 4 years ago. And I relocated to San Francisco, which is now where I live. I apologize in advance. I just got back from Sweden about 2 days ago. So if at some point I sound like I don't make sense, I blame the jet lag. But super happy to be here. I work with our banking partners today. For those of you who don't know Trustly, we do open banking payments, specifically Pay by Bank. So this is really the bread and butter of what I do. So super excited to be here.
Lovely. Thank you. We will not hold it against you if you start babbling incoherently, because that is a long flight. But we really appreciate you joining us. Troy, how about you next?
Yeah, so Thank you for having me this evening. So Troy Carruthers, I'm the COO at the Merchant Advisory Group. Many of you may know it as the MAG. The MAG is it's an association that represents 200 plus merchants, and in particular in the payment space. And really the focus of the MAG is on education, collaboration, and advocacy for merchants in the space. So I actually joined the MAG as the COO about 3 months ago. So I'll be the rookie on the call in that regard. However, I am not new to the MAG. So what I mean by that is I was actually on the MAG board for about 8 years, and had stepped off the board in 2020. And this opportunity came up here, like I said, a few months ago. And based on where my passion is and the passion I have for the MAG, I thought this would be a great fit. So rejoined. My background is managing payments, managing credit card portfolios, managing retail aspects of issuing and acquiring payments. I managed all of the payments for Kohl's for about 18 years, worked in consulting and payments for about 5 years, and I'm also a reformed banker, having worked for Citibank in both Latin America and the US for about 8 years as well. So glad to be here this evening.
Thank you for joining us. Yeah, the word rookie really doesn't apply to you in any context apart from you joining MAG in your current role at the moment. So excited to have your expertise as a part of this discussion. And then finally, Dean.
Hey, thanks for having me. So Dean Nolan, I am the head of payment strategy at Finzly. Also do a lot of other things in payments. I'm executive director of PayCLT on the side. Been in the industry for about 35 years. Just a quick update on Finzly. We are a provider of API first, cloud native, multi-tenant, microservice-based payment processing, so a modern payment platform. There's a payment hub component of it, which has ACH, wires, RTP, FedNow, Swift. There's also an international banking component of it. We do FX, trade finance, swaps, and there's virtual account support. We also provide that to our customers. And we sell our solutions primarily to banks, some fintechs, and really Pay by Bank has become a topic of interest. We have a platform that's API first, and there's opportunity, and it's all about moving money, and Pay by Bank and the whole concept behind that kind of ties perfectly into that. So I'm really excited about the conversation today, and as well as being joined by experts in the space who see a different side of the world than I do frequently. So this is going to be a fun conversation.
Excellent. Well, let's jump right into it because we have a lot of ground to cover. Again, as a reminder, if folks have questions as we're going that you'd like our panelists to weigh in on, please go ahead and submit those in the chat. But I think before we get too deep into questions around the impact of Pay by Bank, the adoption of Pay by Bank, we should probably define what we mean by Pay by Bank. I'm trying to think of the right way to even ask this question. We have a tendency in fintech and in financial services to rebrand things that have actually existed for a long time. And I think that Pay by Bank, to a degree, kind of falls into this camp as being something that is both very old, in the sense of the actual underlying rails that are often used, but also new and something that is deserving of a different designation because it does describe a way of using those payment rails that is new and that does solve for problems that have historically existed. So let's start by trying to define what Pay by Bank is, and put it in the context of the current payment landscape and some of the other payment methods that are available to consumers and businesses. I'd love for each of you to kind of give your definition, but Moa, I think I'm going to pick on you first to start on this question.
Thank you. For me, to your point, Pay by Bank in itself is not new. It literally means paying from your bank account. I think the reason it's seen such significant growth and become such a hot topic for discussion, if you may, is really with the company of collaboration, if you may, with open banking and instant payments and how those have grown over the last X number of years. Because with the growth of open banking, you see that the user experience has gotten better. You don't need to have, such a clunky user experience. You don't have to remember your account and running number. You don't need to worry about, fat fingering anything or anything like that. So the user experience has gotten much better. And then, of course, with the growth of instant payments, now we have RTP, we have FedNow, that actual payment experience has also gotten better. So it's literally just made pay by bank, which again is not new, more accessible and convenient. So that's why it's become much more popular.
Got it. I think that's a great way of describing it. Dean, what would you add to that?
It's hard to add much to that, but but the only thing I'd really say is you brought up, is it old, is it new? And it's both. I agree. And to me, really, it's the instant payment side of it that is the new, and that's the exciting part that I see. You've got real-time 24/7 payments now that can go with pay by bank, whereas previously you were dealing with payment networks, pay by bank payment networks that weren't 24/7. Maybe there was some real-time components or pseudo real-time, we could make it look like it was real-time, make it look like it was 24/7, but it really wasn't. So that to me opens up a lot of doors. And, I see this also as it's another choice, right? And it really fits into that broader scheme of payment choice and starts to address some, use cases maybe better than the other payments that are out there. So that's another reason why it's got attention of people, is it's gonna make some use cases work a little bit better than maybe are out there today. And when that happens, then it gains adoption and we'll continue to see it grow. So I think it's a really exciting space. And I agree with everything you were saying, Moa, too. The open banking side of it is really going to open doors for this.
Yeah, absolutely. And Troy, just anything you want to add on top of that? Because I do want to get to, as Dean was just describing, use cases and where we can actually use this, but what would you add to this definition?
Yeah, they covered it really well. I would just, I guess the only additional piece I would add is, in terms of why it is, why there's been a kind of a new breadth, right, that has come into it, is partly just technology. Right, if you think about how we've brought a lot of the technology forward to improve the customer experience, as Moa mentioned, and improve the way that consumers can sign up, right, and add their information, it's come a long way in a few years. So I would definitely, I think I would be remiss if I didn't mention the technology piece. But I think additionally, merchants are looking for something different. Right, they've been looking for additional alternatives. They keep looking for additional options that give them more control. And I think that's another reason. So you bring the technology piece into it, you make it easier for the consumers, and at the same time, it provides another option for merchants.
Yeah.
Yeah, and Troy, I'd add to what you said too. I think, you talked about the merchant side of it. I think there's also a consumer side of it. And, as I see payment trends, especially with the younger generations, there's less desire to use card and more desire to use things like paying from their account. And this then kind of fits into that need. So you start to have a consumer set that wants it. You have a merchant set that wants it. Now you've got a payment rail and technology that can connect the two efficiently. You start to have all the pieces necessary for this to become a real solution and more than just a niche play.
And I think there's another piece too, and it's if you think back to the financial crisis, right? Which a lot of us, it seems like it was a long time ago, but it wasn't too long ago. Whenever we put a lot of new rules and a lot of new regulations in place and made it more difficult for people to get credit, right? So as we made it more difficult for people to get credit, they had to look for other alternatives as well. So as we think about pay by bank, that's another aspect of it here today, where pay by bank does allow for consumers who don't have access to credit and so on to be able to have another tool to be able to pay. And it also, along those same lines, allows a merchant to be able to extend their products and services to a wider set of people.
Yeah, it's fascinating. I mean, just to put a bow on this definition point, I mean, it's interesting because when we talk about payments, there are so many different layers to a payment, right? And obviously, part of it is the underlying rail. And as we've been talking about, when progress is made at that base level of infrastructure, it unlocks new use cases or new values, right? And so the progress we've made moving towards real-time payments in the US, real-time 24/7, 365, always on payments, that is just a good solve for certain use cases that we don't have good solves for, or that we use maybe tools that aren't a great fit for certain use cases like wires or debit cards or credit cards where the cost might be different. So there's an aspect of the underlying infrastructure to it, but there's also, as we've been talking about, the user interface layer, right? And kind of bringing everything together. And anyone who has ever paid by bank in the old-fashioned way, which is to say typing in a routing number and account number, probably understands why that never took off at a really, really high level. It's clunky. It doesn't feel safe, quite frankly. Like just typing in your routing number and account number, it's really easy to fat finger because those are long numbers that don't really have a lot of meaning to consumers. So the ability to do it through more of an open banking credentialed access user interface layer also makes these things feel safe and more accessible. And so I think to put a bow on this topic, the idea that all of these different areas of improvement are happening to different layers of infrastructure in the payment stack sort of creates a moment where now we can do this thing. So the next question I want to ask, and maybe Troy, I'll start with you and we'll sort of go in reverse order, is around use cases, right? And I guess I would bucket this question into two parts, right? One is, where have we seen adoption so far, like actually in the market adoption of pay by bank? And then separate from that, because adoption sometimes doesn't start in the places you expect it to, or
Right.
certain parts of the market will have different incentives than others. Where are some natural places where you expect pay by bank to eventually find some traction, even if it's a little early right now, just in terms of what it can do relative to other payment methods?
Right. So I think the most obvious one where it's made progress here in recent years has been recurring payments. Right. To me, that's probably the most straightforward one, and you can see that in a lot of the phone service providers. You can see that with a lot of the utilities and so on. You enter
I do
your
it with Verizon. I save money on my bill every month. Yeah.
Exactly, right? So, you enter the information once, right? And you're taken care of as a consumer from that point forward. So you don't have to worry about entering your information every month or anything. It's just taken care of for you. So I think that has provided a sense of security, right, for a lot of consumers as well. So, that one is probably the most obvious. Where I think there's still a significant opportunity is in just everyday purchases, right? So there have been a number of steps forward in recent years in relation to the technology which I referenced earlier. But you think about how a consumer now can pay using their phone, right? Never having to pull a card out or pull out any other information. They can pay from within the app. Well, if that can be done now at most restaurants, and it can be done at even, believe it or not, most gas stations, or the big, with the bigger gas stations or the bigger brands, then that is where a lot of that opportunity lies, right? Getting that consumer to use it and creating that muscle memory. The other aspect that I would, I think is important to mention is that based on the cost differential for pay by bank compared to many of the other forms of payment, those merchants now have an opportunity because of the savings, right, to be able to provide additional incentives, right? And those incentives, can and do in many cases. Alex, you mentioned Verizon. You pay a little bit less when you pay by bank. Well, those can and do change the behavior of the consumers, right? So I'll pause there, leave a little bit of meat on the bone for both Noah and Dean.
That's great. And I will add just one quick thought on what you said around the mobile payments piece, which is just that I think in some ways Apple Pay sort of crawled so that Pay by Bank could walk. And what I mean by that is just that there's a really big educational component to just teaching consumers how to do something mechanically. We're all really used to taking a card out of a wallet and first we swiped it and then we dipped it and then we tapped it. Like that takes a while. But I think the combination of cards now being something you tap, which matches the user experience of the phone being something you tap, and Apple Pay and other mobile wallets being kind of slowly and slowly more ubiquitous over time. Doesn't happen overnight, but I think just to put a fine point on what you were saying, that consumer behavior, I think, has reached a tipping point where now it's not strange to people to pay in
Right.
this way. And I will say, to your point about merchant adoption, I was driving through Eastern Montana, not a place that's been saturated with tech, I will say. And at a gas station that I stopped in with a town that has maybe 800 people in it, the gas station had the ability to take mobile payments, contactless payments, right out on the pump, and the ATM inside did have Bitcoin purchases available. So these things are saturating the market, I think, in a way that, 5, 10 years ago, we really didn't expect. Dean, what would you add to the use case discussion?
Yeah, I'll speak to it a little bit more generally because I agree with what you're saying about the infrastructure coming in place. And, I look at this, especially, I think, Troy, you mentioned going out into the purchase space, right? And we get to a point with these new payment technologies where they solve a value, they bring a value proposition that will solve a use case, solve a business problem better than something else. And that's where I think you're going to see the use cases growing with Pay by Bank. And it's really going to come down to, like, for me personally, when I look at it, it's like, are you in a trusted environment? Right? If I'm making a purchase with a merchant I don't know, or it's a risky thing, I don't know if I'm going to get the goods or services, I want to have the protections of a card.
Right.
If I'm making a purchase at my grocer and I've been going there for 15 years and we know the person, and I get a bad gallon of milk, I'm just going to go back and exchange it. I don't need the card to give me those protections. I don't need that extra expense, that extra overhead. So I start to see the payment modalities starting to, an opportunity for us to start aligning the payment modality with the value proposition of the actual payment that's happening or the commerce that's being conducted, right? And I think that's why you see it happen in recurring payments. Again, it's you have trust. You kind of know what's happening. Now, I will raise a red flag there, though, and say, that's one where I see instant payments really being the benefit there, because I have had situations where I've set up Pay by Bank. I think we all have. And we set up a recurring payment direct out of our checking account. We want to stop the purchase, but the merchant keeps billing us. And then your method of recourse is limited.
Yeah.
This is where instant payment and request for payment comes in, because now it's put in the control where it needs to be back with the consumer. Now the consumer has control. So then why not do it out of your checking account directly? It's easier. So to me, it's really that bigger perspective of, you've got the technology opening up new use cases, and which one of those are going to take off next. I wish I knew, right? I'd love to be able to place a bet in one of those places, but I don't.
No, that's fair. And I think, just to add one thought on what you said, the idea of these trusted environments versus untrusted environments is super key, I think, because, to build on a point that Troy made, merchants' ability to create loyalty within their own ecosystems really depends on the relationship that they have, right? And obviously, Starbucks is sort of the canonical example of this, but there's lots of them where it's like, hey, if you're interacting with me on a regular recurring basis, not only is there a great deal more trust there, but there's also the ability for me as a merchant to think, I might want the savings from a payment to be funneled into rewards to strengthen even more this relationship, this recurring relationship I have with these customers. So the idea of trusted ecosystems versus a one-time, I don't know who you are, I'm buying something over the internet, like that's a key point as it relates to how we map out these use cases. Moa, I know that you do this every day, right? At Trustly, this is what you guys do, and you deal with a lot of use cases. And I know that, just to put something on the table, there's again this idea that there might have been certain categories of merchants that got to Pay by Bank earlier, maybe because they were having a more difficult time with cards or with others. But looking beyond some of those edge cases, where in kind of the core payments landscape do you see this starting to take hold?
I think, not to sort of not agree with what you just said, but I think it's really interesting to watch where it's like naturally grown in those categories that you mentioned, because there are merchant categories that are considered higher risk. We are very big in the online gaming space, or we have
Yep.
many merchants in that space.
Yeah.
And even though these entities are pretty much as heavily regulated as banks are today, they are scary to many financial institutions and other companies.
Sure.
And they therefore did not have access to many different payment types. They come traditionally from a cash environment. And we all know the limitations with cash, and you have to pack a car full of cash and travel a specific way, to very bad experience and not particularly safe always, and all those things. And then when you don't have access to other payment methods, and then growing into that space, Trustly has seen a very natural growth with those companies as more and more states come online with online gambling licenses and what have you. So I think that's a really good example. We also have, coming back to the point somebody made just a little while ago, we have maybe people who don't want to have go into debt. They don't want to have a credit card. Maybe they don't have the ability to. And then you also open up the market to many of those individuals. So I think, and I mean, there are plenty of other examples, right? You have the crypto space. You have other, traditionally higher risk industries that now have access to a payment type, and then sort of tying that together with the technology piece that you guys were talking about. I think it's, again, with the combination of open banking and instant payments and then pay by bank, I think that's a really good, trio of just making it more accessible and convenient, like I mentioned. But having said all of that, I still think there's so many benefits with cards on the consumer side. There's a very clear, this is why it's so great for the merchants, but I think there's a lot of room for opportunity for improvement, I should say, on the consumer side. How do we make these payments more attractive, if you may, to the consumer? I mean, coming from Europe myself, we don't really have the same credit card culture as we have here. So for me, coming here and realizing that, wow, if I pay with my credit card, I get all these points, and I can, tickets flying back to Sweden or just traveling in general is expensive, and all of a sudden I can use my points to do that. Then even for me working with what I do, sometimes I'm like, well, of course I'm going to pay with my card because I'm going to get all these points. So I think there's a lot of room for improvement in that sense. And then tying back to what Troy said, I think because they are traditionally cheaper, these payments for the merchants, then maybe that's the way how we can make them more competitive also on the consumer side, because you can have these savings where you can offer, at least at Starbucks, for example, oh, if you pay with your bank account, then you get, I don't know, some type of coffee for free or whatever it is. So you're actually making them more attractive. But I think, to Dean's point, maybe also on the bigger purchase side, I think there will be maybe a struggle. But for the everyday purchases, I don't see why it couldn't be at least on par with cards.
Yeah, no, I think that's true. And I think that, one thing you hinted at there that I just want to sort of round out, which is that I've always thought of payments as one of those things where someone in the transaction, either the merchant or the consumer, has more leverage than the other one, right? And so to a degree, it's kind of a question of, when you're looking at different use cases, who sets the terms, right? And traditionally, just to give an example, you couldn't, and this is prior to Built, obviously, but you didn't used to be able to pay your mortgage with a credit card, right? Or pay your rent with a credit card. That just wasn't allowed, because traditionally, the landlords and the mortgage servicers had the leverage in that relationship, and they could sort of set the terms. By contrast, there are plenty of small merchants, retail, other places where you're making a choice if you don't accept credit cards, right? And that's going to be there's going to be an impact on your business that you're going to have to model out and understand. And the reason I mention all of that is just that we are also seeing some categories of use cases for pay by bank, particularly for faster payments, where the merchant is able to set the terms for what transaction or what payment method you're going to use. And they like some of these new capabilities, right? So to use one example that the Fed talks a lot about with faster payments, car dealerships love faster payments, right? Because as soon as you drive the car off the lot, it loses a lot of value. You want to make sure that money is in your account. And so they are adopting pay by bank specifically with faster payments with FedNow so that they can get paid and eliminate that settlement risk. And so there are, I think, lots of those little niche examples. But Mo, what you were saying about like how merchants can solve this adoption problem, because you're right, like in the US, cards are king and they are for a reason, and we have a culture of that that's hard to break. Uh, Troy, I'd love to get your thoughts on, from an industry adoption perspective, where the most significant challenges are and where some of the advantages are for merchants driving adoption of pay by bank.
Yeah, so starting with the challenges, I think historically the challenges have come from the consumer experience, right?
Yep.
We've touched on that a couple of times, but the consumer experience has improved so dramatically in recent years that has kind of gone to the wayside, and I think we've gotten past that in large part. So with that, I think the biggest opportunity is still with the merchants being able to kind of control their own environment, right? You talked about the merchant and consumer, and who controls the transaction, or who has leverage in the transaction. I would argue that the merchant, let's say the merchant gives a discount, right, in relation to a pay by bank solution, payment. If that discount matches whatever it is that they're having to pay to accept another form of payment, that merchant is probably winning, right? And the reason I say that is because instead of that merchant funding United Airlines miles, right, that create zero loyalty back to that merchant, the merchant is now funding its own loyalty program, which is ideally going to have that consumer drive, their purchases back to, right, that same merchant. So the idea is, funding your own loyalty program and creating that loyalty, that affinity, right, with those consumers. To me, that is the biggest opportunity that the merchants have, regardless of the vertical that they're in. That's probably the biggest opportunity today with pay by bank.
Yeah, absolutely. Yeah, go ahead.
I was going to say, Troy, I agree with you on that. And, I think if those savings get passed on to the consumers, I 100% agree with everything you said. Right. I think the question is whether those savings will make it back to the consumers or not. And, there have been some historical precedences around, with Durbin and stuff, where there's a number of studies saying maybe those savings didn't make it back to the consumers. And I think that's just where, at the end of this, if this is going to take off, you got to have a win for the consumers and for the merchants at the same time. And that's really where, I think the merchants have the power here to take some of those savings, give them back to the consumers, and then it was all going to work well.
Right. Well, and so to that point, while I was consulting, I worked with a number of different pay by bank programs and helped build out some different pay by bank programs. And I got to see very, very clear examples where when those benefits were provided to the consumer, right, it did create the loyalty. It may not have made that consumer buy more as a whole, but it made that consumer consolidate their purchases to that location or to that company, right? So at the end of the day, the merchant did benefit from it. And to me, that's the whole reason that you would want to do it if you're a merchant.
Well, and a couple things to add to that, and then Mo, I'd love to have you jump in here too, since you guys try to solve for this on a regular basis at Trustly. But I think you have to think broadly about incentives as well, right? And so, like to use Verizon as an example, they give a portion of the savings they get on pay by bank back to customers like myself, right? And so there is an economic benefit. And part of the way that they justify that is not just, hey, we're saving money on this transaction. The other thing it does is they think of it as a customer acquisition expense because it allows them to advertise the total cost of their lines as being potentially lower while still adhering to truth in advertising requirements. Because if you pay this way, you can pay this amount. And in a highly competitive market, that in itself is a value, right? And so they can justify the investment in getting adoption of pay by bank, not just because it's a less expensive payment mechanism than a credit card or a debit card, but also because it contributes to a broader marketing advantage that they can then push in the market. And for highly competitive spaces, that really matters. The other two examples that I want to just mention really fast on the consumer incentive point, because it's just like this is the sticking point in pay by bank, I feel like. One is merchants, and Troy, jump in if I'm missing anything key here, but they have the ability to also alter the experience for their customers in ways that might not be directly financial, but are important, right? And the go-to example I've been using lately is Costco. They obviously have their Costco card that they use. One of the perks they've introduced for their more executive membership is the ability to get early access to Costco before everyone else gets in. And my wife despises crowds and shopping in a crowd. And so, like, that by itself, that benefit, which isn't a monetary cost in a direct way, the same way that rewards are, that's hugely valuable. That's Costco like shaping her experience in a
Right.
specific way in order to create that like loyalty and that bonus on top of like, oh, I didn't use our regular credit card, we didn't get the points. Like, I don't care about the points. I care about avoiding the crowds. Moa, anything you want to jump in on there, or Troy? I'm curious to get a little more deep into the consumer incentives and other things you guys have seen.
I think the only thing that I was thinking about before that I wanted to add, coming back to the recurring payments discussion, is,
Sure.
your bank account never expires, right? So if we flip the previous argument where it's like, I think Dean, you mentioned, oh, it's you have limited recourse in case you get continuously charged. But on the other side, if you're the merchant and then somebody has signed up their credit card or their debit card and then that's expired, then the payments are going to fail, and that's never going to happen with your bank account. So it could also be a benefit from that perspective. I think that was the only thing.
Yeah, I'd even take that one a step further. And it's not just expired. It's how frequently does the average consumer turn over a credit card, right? Yeah, I mean, you'll close a credit card, you'll open a new credit card, and so on, right? How often do you do that with your checking account, right? I mean, it's you open a checking account and you keep it unless you're moving or something, right? And whatever bank you were using is no longer, you don't have access to it wherever you're moving, or you don't have access to a brick and mortar branch, but you still may keep it because you can do all your banking online today, right? Where, again, if it's a credit card, you may close it just because, you disputed something, you didn't like the way, things worked out, or quite frankly, like a lot of people do it, you're closing it because you want to open a different one that gives you better rewards, right? But, it's that issue, especially in recurring payments, that creates additional challenges as well.
Yeah.
And I think all those are good points. And I think, there's two sides to both of this, right? Because the fact you never do change your bank account, if you do get a problem where you have that 1 in 100 merchant that's causing problems and isn't going to stop charging, the recourse of having to shut down your checking account to stop it ultimately is drastic compared to closing a debit card. Doesn't happen that often, but it does happen. And I think that's why, as we've been talking with folks at Finzly and we've been talking to some of our FIs, being able to use some of the technologies like we have, like virtual accounts, and putting something as a buffer between the checking account and the payments, so that you start to get that benefit in there. Those are some of the things I think you'll start to see coming to the market in the future, as the financial institutions look for better ways to support this as well. So you got a lot of things happening on both sides to change the experience on both sides of this, because it's a new form factor, and that new form factor might need some additional new infrastructure in addition to what we've seen in order to make it work exactly right.
Yeah, absolutely. So one question that came in that I want to address now, and then I do want to spend a little time talking about open banking and 1033, since that is sort of a hot topic right now. But I do want to ask about smaller merchants, right? Because one of the things about payments generally is that, and this applies on the bank side as well, and on the payment provider side, a lot of value in payments tends to accrue to the large providers, right? It is a game that is more easily won with scale. We've obviously seen Starbucks and Target and Walmart and even McDonald's more recently. Like, we've seen a lot of companies really invest larger merchants on payment innovations and ways to steer payments and create some of these loyalty programs. I think it's more challenging, or at least it historically has been, for smaller merchants to take advantage of some of these. And I guess the classic example is, you always had to be a merchant above a certain size before it made sense to launch a co-brand card program, right? Even though it was beneficial to you, you didn't until you got to a certain size because below that size it just wasn't feasible. Troy, is this changing? Like how can smaller merchants take advantage of Pay by Bank, and what have you seen there?
Yeah, so I think the smaller merchants in particular, the ones that are still face-to-face transactions, the card present, style transactions,
Sure.
have much more limited access to be able to use Pay by Bank. I mean, that's the reality of it today. So what I haven't seen yet is a really good functional solution for those smaller individual merchants. Now, Dean may be able to speak to one, or Moa may be able to speak to one, but I haven't seen one from a merchant perspective, because, quite frankly, the consumer, when you think about the consumer in this mix, the consumer doesn't want to have to sign up necessarily, right? Provide their credentials for every individual merchant that they would typically visit. But if it's a merchant where they're buying things frequently, or we talked about recurring payments and so on earlier, then they don't mind, right? But if it's the mom and pop, right, where you're going in once every couple of months, that's a much more difficult equation.
Yeah, absolutely. So we have a little bit of time left for Q&A. Before we get there, and these are some great questions, everyone, and we will circle back to some of these because I appreciate you asking them. I do want to quickly talk a little bit about open banking in 1033, and would love to get everyone's perspectives on this. But obviously, we've seen Chase make a fairly aggressive move on charging fees for access to their open banking APIs. Notable for this discussion is that the fees were higher for payments use cases involving account routing numbers or tokenized account numbers, than they were for other use cases. There's arguments around this both ways. Obviously, we've now seen the CFPB somewhat reverse course and say that they are going to enter into a revised rulemaking process where they're going to make some changes to the rule as we have today. So just curious to get each of your thoughts on kind of what you're seeing on the open banking side, what your sort of perspective is on it, and then where you think we might end up. And Mo, we'll start with you.
For sure. I'm going to start by saying I might be a little biased coming from Europe and having gone through all of. I think one of the first things I was asked when I started at Trustly was somebody said, "Hey, can you please reach out to all of our banks and talk about their PSD2 APIs?" And my first question back was, "Sure, what is an API?" So I've come a long way since then, but anyways, that was not the point. But having go through all of that and watching how PSD2 has supported the growth of not only open banking, but Pay by Bank, just by the fact that you have to provide an account information API, a payment initiation API, which is a C2B payment. And then, of course, on the back of that, watching that payment type grow. It's been really interesting to watch the development of everything going on here as well. Of course, it's not the same, but if you look at, you have Europe, European Union, you have the UK, you have Australia, you have Brazil, you have a number of countries who have sort of gone through the same process, and then the US deciding, no, we're going to do something completely different. It's been really interesting. And especially the last couple of weeks, I feel like being so eventful have been really interesting to watch. If I take the open banking argument just purely, which is, I own my data, I should be able to share that data with who I would like in a secure way. This, of course, decision counteracts that. But at the same time, since we don't have that regulation completely enforced yet, there's also nothing that says that they can't do it. So it's really interesting to watch the sort of back and forth. And I'm very curious to see where we're going to end up. I hope we decide not to reinvent the wheel, but rather learning from what others are doing. But who knows at this point? I'm curious.
I think we all are. Dean, what would you add to that?
Yeah, Mo, I think you hit a lot of the points I was going to say. From my perspective, I agree with you. I think the perspective of, hey, I own the data, I should be able to share it with whom I want makes sense. I think where the bank side of it had come in was, if there's a cost involved with sharing that data, who has to bear the cost? Right. And I'm also in favor of people charging where value is being provided or services are being provided. So I see both sides of it there. Ultimately, I think the key thing is we just need to settle on one particular rule and decide what it's going to be. Because in that point, the market, one of the things we do well in this country is we let the market figure things out. And once the rules are there, once there's some consistency, the market will figure this out. We'll start to see, I don't know what we'll see. Maybe we'll see some creative banking products where, you get a particular checking account and instead of a free toaster, you get free data sharing, right? You don't know. And there's like so much that will happen, but all of this uncertainty, I think, is just, it's not good because we don't know how to react to it. We don't know how to build a product. We don't know how to create a solution and make the investments necessary. So to me, that's the big thing is just let's just settle on it. Let's get a path going forward and stick to that path so that we can actually do what needs to be done and do the right things for customers and merchants and everybody involved.
Yeah, no, I totally agree. I've written before that both regulatory and deregulatory uncertainty is a problem, right? And I think that's exactly right and a point well made. Troy, what would you add from a merchant perspective on all this?
Yeah, I'd just add two things. Well, they're not really even ads. I would just try to put an exclamation point on what Dean said in relation to making it competitive. Right. Let's make sure that we let the markets work, right, the way that they're intended to work. Let the competition flow through and not put up the barriers or force people down a path or force companies down a path to where they have to use potentially an entrenched, outdated system. Right. Let's follow the path of least resistance here and make sure that we can create competition. That's where everybody's ultimately going to benefit.
Yeah, absolutely. Everyone except maybe Chase, who doesn't like more competition, but that's a separate issue, and we'll legislate that through the normal policy regulatory making process. So, couple questions that have come in, and if anyone has additional questions for our panelists, now is the time. But I want to hit a few before we go to the breakouts. One question that came in is for pay by bank in-person transactions. What do the risk models look like, and to what extent can RTP mitigate that risk? Anybody want to jump in on that question?
I can. I don't know if it answers the question directly, but we do have an example of an in-person pay by bank transaction, which I think is really cool. So, as I mentioned, we are big. We have many merchants in the online gaming space. And one part that we are now moving into, because it's been all online, is actually in the brick and mortar casino world. So again, coming back to the argument I made previously about, it being mainly cash. Now you can walk into a casino, you can make your deposit to whatever game you want to play paying directly from your bank account. So you don't have to go to the ATM, you don't have to stand in line to do that. You can gamble directly. From a Trustly perspective, the transaction is exactly the same as if you do it in an online environment. So again, if you take all the risks with cash, those go away. It's more convenient for you. It's probably, I don't gamble myself, so I don't know, but I'm assuming it will be a better gambling experience and all of that. So I think moving into an in-person space for other markets or other industries, I should say, as well, shouldn't be that big of a leap. And Alex, to the point you were making before, today we pay using, Apple Pay or Google Pay or whichever one you have. Imagine that you have, your bank account linked the same way. It's just that it's not linked to a card; it's linked to your actual bank account. I don't think as a consumer that leap is so big. So it's more, how do we solve it on the merchant side? Many merchants have years and years and years of reconciliation and settlement processes on the card rail. So then moving into a pay by bank, of course, it adds a lot of complexity. That is something that we're also working on solving. How can we settle on the card rails while having the consumer pay with their bank account? So that will also open up an even bigger market. So I think, like either Troy or Dean was saying on the open or the 1033 things, I think there's just so many smart people around that will figure out cool solutions. It's just a matter of how do we make them attractive to both merchants and to the payer.
I'd add that, I mean, there are already different services out there today that can look at the transaction. So let's say from whoever is facilitating the transaction, not the merchant themselves, but let's say whoever's facilitating the transaction is actually taking on any potential risk as a result. There are models out there that are being utilized where they're looking at transactions and saying, is this a standard transaction that this person would make? If it is, okay, we're going to process it through a more of a traditional ACH in the background, right? Even though it was presented, via their app, right? But if it's a transaction, for example, that might be out of that consumer's regular pattern, okay, maybe we make the decision now that that one's actually going to be processed RTP, right? Or, we're going to go ahead and make sure, we might have to spend a little bit more money to do it, but we're reducing the risk on the back end, right? And it could be just because, again, the transaction is outside of that person's regular pattern, or because it's a higher dollar transaction. There could be any number of different factors in there, but there are models out there already today doing that.
Yeah, Troy, I think you hit a great point there. I totally agree. There, based on those, there's so much opportunity out there for us to create workflows that are tied towards the characteristics of the transaction itself instead of just being generic, where you can have the different type of smart routing or the orchestration really fit for purpose and deliver what's necessary to give the best value proposition out there. Agree?
Yeah, I also think the other thing that's worth noting about Pay by Bank is just that bank data is really useful and rich in a way that the credit card data or debit card data just isn't, because those rails weren't designed to pass a lot of information back. And so, I've spent a lot of time thinking about like what are the types of experiences you can unlock for consumers when, for example, they're going to a grocery store and that in paying they're going to overdraw their account and get hit with a non-sufficient funds fee or an overdraft fee. Is there something that you can do with them in the moment? Because not only are they paying by bank, but you're getting access to information about their bank account and the impact that transaction will have on their bank account. Like there's all kinds of smart routing stuff that we can start to talk about when you're using that credentialed access to bank transaction data, which I think is, again, like what makes Pay by Bank different than just paying with your bank account. It's that type of stuff that's potentially really useful. Troy, the other thing that came in as a question a couple times that I want to bounce your way is the prevalence of surcharging for credit cards at merchants. And I guess you could think of it as the carrot versus the stick sort of question. Do you have a sense of, and this might be different between small merchants where you see that a lot versus bigger merchants where you don't tend to see it, but do you have a sense of like what drives consumer behavior there, or how that might factor into adoption of Pay by Bank?
It's funny because you hit the nail on the head in terms of you see it very frequently in the smaller merchants, right? In particular restaurants and so on, right? But you don't see it at the larger merchants in general. And you also have to take into consideration the cash discounts. The way that cash discounts are managed, it's different across different states, and quite frankly, even the surcharging is different based on the network, right? And I would argue if you go out there and you look at the number of small merchants that are surcharging today, there's probably double-digit percentage of them that are doing it incorrectly, and potentially charging the wrong amounts, right? Because there's a cap on Visa, which is different from the cap on MasterCard and so on, right? But last time I checked and paid and had a surcharge at a restaurant, they didn't ask me ahead of time if I was using a MasterCard or if I was using a Visa, and they didn't ask me if that card was credit or debit, but they just built on a surcharge. So my I would say I think this is going to take a long time, right, in the marketplace to work through. I think probably, unfortunately, it will require some legislative changes as well. But I think on that one, we'll just have to stay tuned.
Yeah, I just jump in on that one too. I think the economics that are happening, I don't know, there's a part of me to think that the merchants that are doing that, especially the small ones, are kind of being short-sighted, right? Yeah, they're going to earn that 3.5% back or whatever on the card fee. How many sales are they losing?
Yeah.
That card's being replaced by cash. Your cash handling expenses are more than 3.5%. It's been proven over the years. I can speak of service providers that I use that have stopped taking cards. Some of them have lost my business because they want to come in and do a one-time job. All they'll take is a check. I don't have to go find a check. I don't know if I have one, right? So I think that, again, this gets back to the point I made up front about payment choice. And the way you do this, you give consumers choices, you give merchants choices, and then you allow environments to be created where you get the best combination that works to make that commerce purchase work as well as possible for both parties. Pay by bank fits in that realm. Maybe surcharging does. I'm not a big fan of it, but it's out there, and we adjust to it and live with it.
Well, it's a great point too, right? Because I tend to think of it as like, what are all the tools in the tool belt? And surcharging is something you're allowed to do. Now, Troy, as you were saying, like sometimes merchants use it in ways that are maybe a little different than how it's intended to be used or how it's supposed to be used, but like that's a tool in the tool belt. And a lot of these things are changing frequently, right? We get access to new payment rails. We get rules put in place that allow open banking for payment initiation. Then we lose those rules. Then those rules come back or they're going to be revised. We haven't even touched on everything that's happening right now around the Durbin Amendment and around challenges on pricing for accepting debit cards. So there's just so many different elements that change constantly. And I think just to round out this conversation, and maybe each of you could kind of offer just a word of advice on how to think about this. But it feels like what we keep coming back to, building on Dean, your point is you have to start with like what's best for the end customer and sort of stay anchored on that because it can get very easy to get sucked into these like sort of optimization games that kind of get away from customer value. So maybe to wrap up, if each of you could just offer like kind of your final words on this and how to think about pay by bank, that'd be great. Troy, I'll ask you to go first.
So, I guess my first thought is, pay by bank is continuing to grow, right? Regardless of, what we might think or, what we might hear from some people in the industry, it's continuing to grow and it's growing much faster. Actually, the majority of all the growth is happening on the consumer side, right? So if you look at the volume of transactions that are taking place from year to year, I want to say last year's growth on the consumer side was roughly 8%. That's a pretty good growth rate when you look at the numbers overall. I think as we continue to make the improvements, as referenced earlier, in technology, and as consumers start to create more muscle memory in terms of doing this time and time again, and seeing it being available on different websites, seeing it be available, whenever they download an app and so on, we're only going to continue to see a faster take rate on this going forward. So I'll pause there.
Absolutely. Dean, what would you want to sign off with?
Yeah, I'd say really focus on the experience that's being provided, right? For consumers, they need a simple checkout experience for Pay by Bank to take off. I think instant payments are going to be a good step forward over the existing payment rail for a lot of things we said. That instant payments workflow or checkout process is a little clunky right now with having to do the approvals. And there's some technologies coming out, a company called App Brilliance I'm familiar with that is streamlining that checkout process. So now it becomes almost as slick as a card, right? And that's what you're going to need to happen on that side. For banks, they need flexible platforms that can handle all these payments and the choices that are happening. And then on the merchants, they need a payment method where the cost and the value are aligned. right? And those are the places to focus on. The rules, the regulations, they're going to keep changing. It seems like, every 4 years we're getting rules. Hopefully we can come up with a way to get past that and lock in some that last longer term. But, I think if you really focus on the experiences, then you're going to have long-term solutions that can withstand some of these rule changes that keep happening.
Yeah, absolutely. And then Moa, final word is yours.
Oh, thank you. I think the only thing I agree with everything that Troy and Dean both said. I think the only thing that I would like to add and sort of drill down a little bit on, I think instant payments and pay by bank is really successful and really great on the disbursement side today. But sort of tying back to Dean's point, I think there's a very big market that we would be able to unlock if we also solve the deposit side of it. We have request for payment functionality, but the user experience for the very limited number of banks that actually can respond to an RFP is that user experience is not great. So I think, and we want to bring people over from other payment methods and of course have a great user experience so that they want to use it again. I think unfortunately that's not the case right now because there's a lot of clicks and redirects and all of that. So sort of tying into what both Troy and Dean were saying, I think it's growing. I think it can grow even faster if we solve for that. And then on the sort of regulatory side, on the open banking side, I think making sure that everybody that has a bank account have the same right to be able to share that data so that your user experience can be not customized, but you can see, oh, maybe here it makes sense to use pay by bank, but maybe in this use case it does not. So you can get all of that great, you can use all of that data about you that you have to make sure that you choose the payment methods that's right for you. If we can do all of that, I think that would be ideal state.
Yep, absolutely. Well, that is a great place to leave our main discussion.